So as we approach the new year, will we be looking at new highs in a new decade? Let's ask our market pros, Gary B. Smith, Kathryn Rooney Vera, and Scott Martin. Scott, I want to get your thoughts on this market as we head into the final days of the year.
Yeah, it looks really good, Charles. Now, that's obviously a time when you should probably be a little bit cautious because that's when things tend to, say, swim up and hit us out of nowhere. But the reality is this. We're seeing a Fed that's accommodative. We're seeing central banks around the world that are very accommodative and a U.S. economy that's finally responding. So to me, the market will likely continue a lot of its momentum, and any pullbacks should be bought.
Here's the thing, though, Kathryn. It's one thing for the market to do what it's been doing, but the underlying economy actually seems to be gaining momentum. Certain areas in this economy, for instance, housing, the housing data we've seen recently, there are signs that business investment outside of these big gold factories could also start to pick up, despite how long in a tooth this rally has been.
Yeah, Charles, and actually last year on this very program, I came on saying you needed to buy the market. It was down 20% precisely on the fear of U.S. recession. I said then recession was not an actuality. It wouldn't happen. It didn't happen. It's not going to happen. My concerns, though, and I'll take the more, not bearish, but I'll take the more cautious route. We're in a market that has extreme levels of greed and complacency. So what I'm telling my clients, Charles, is protect your positions, either sell some that are up big or buy options. You can buy put options, which protect your downside, because I don't think, Charles, that the market is pricing in any type of political surprise in what will inevitably be a volatile year in 2020.
Inevitably, but also, Gary B., you're a market historian. You know, markets typically do well during election years. And then, again, you look at some of the data that we have, the headwinds of 2019 could actually be tailwinds of 2020.
Well, they could. I tell you what, Charles, you and I talked, in fact, a couple weeks ago about this parabolic move the market's making, and I think Kathryn and Scott both alluded to it. It just seems a little thin right now. I mean, we're going up. We had all these things that we had to worry about: Brexit, the impeachment, the trade tariffs with China, and yet it keeps going up. And I'm scratching. Look, I love it. Don't get me wrong. But I scratch my head thinking, am I missing something? Is there nothing to worry about out there?
I'll tell you what to worry about.
I can't find anything. Don't get me wrong. But I'm worried that there's got to be a black swan out there that I'm missing. It just can't keep going straight up in spite of everything.
Well, Kathryn says she's going to tell you what you should be worried about.
Well, Charles, a third of all debt now is negative yielding. I mean, no one is talking about this right now because the markets are all at record high euphoria stage. But we have negative interest rate policy on a global scale, except the Fed, thank God. Hopefully we never get there. But that has been fostering too much risk appetite and assumption of risk. If we get even the specter of inflation in 2020, then I think the markets are going to retrace in a meaningful way. One more point that I'll say that is not priced in right now. If we get a Sanders or a Warren nominee, guys, let's face it, these are the facts. The market's completely ignoring it. 50% of the S&P 500 is attached to banks, tech, and healthcare. These are people that want to do those in.
You make a good point. When Elizabeth Warren was ahead in the polls, healthcare stocks in particular took it on the nose there for a moment. But Scott, we hear this a lot, though, that there's too much euphoria out there. Right now, individual investor optimism is too high. But it was the professional investor and their pessimism all year long that I thought was remarkable, despite the fact that the actual data we were seeing was great data and all the negative stuff was all on the speculative side.
Yeah, it wasn't bad. And I'll tell you, the market tried to forecast at times certain slowdowns, which it may have, but it obviously recovered. And I'll take the opposite to Kathryn's point, though, because a little inflation could go a long way for stocks here, Charles. And we've seen inflation absolutely nowhere in the last several years. The Fed has made comments to the fact that they'd like to see some inflation, so I think that actually could be good for stocks. And don't forget, too, the fact, guys, that earnings could expand really nicely next year off of a pretty easy comp year this year. So if we get some earnings expansion, valuations, and the market could expand as well, that could take the S&P even higher.
Gary B., consumer sentiment, individuals saying they look at inflation over the next 5 years like at 2%, a little over 2%, the lowest on record. We know the Fed kind of pivots toward that. I mean, if inflation is a concern for the experts, for Main Street, people are expecting higher wages next year and low inflation. Is that too much of a Goldilocks situation?
No, I don't think so. I think most of the people look at inflation are thinking still back to the Arthur Burns, Paul Volcker area of inflation. There's just so much competition out there. Back then when they were fighting inflation, when Paul Volcker had 10% inflation, there was no internet. You couldn't go around and shop easily for prices. Who has pricing power anymore? I talked last week that there's basically one duopoly out there, Boeing and Airbus. That's it. Those are the only people that have pricing power. As far as wages, to other point, they've grown the fastest, even faster than they have under Obama, which people don't point out. And finally, the final point I want to make is, last I looked, there's like $5 trillion on the sidelines of people that were afraid to get into this market. That's the flip side of my fear argument. That's the rocket fuel.
And last week, 16 billion of it came in. Maybe the rest will pour in as well. Folks, we got to leave it there. Merry Christmas. Thank you all very much. Appreciate it.
Thank you.
Merry Christmas.
Hey,